Markets digest FOMC minutes. Wall Street equities are mostly lower on Tuesday amid the prevailing risk aversion triggered by lower than expected economic data out of the United States. The ISM Services PMI fell to 60.1 from May's record of 64.0, well below the 63.3 expected. Investors were also nervous ahead of the FOMC meeting minutes due later today. As such, the S&P 500 and the Dow Jones fell 0.20% and 0.60% respectively, while the Nasdaq Composite bucked the trend to gain 0.17%. Asian stock markets followed Wall Street lower Wednesday as market players braced for minutes from the Federal Reserve's last meeting. The MSCI's broadest index of Asia-Pacific shares outside Japan edged down 0.6%. The Nikkei 225 in Tokyo sank nearly 1%, while the Hang Seng in Hong Kong lost 0.40%. The Shanghai Composite Index was up 0.66%, despite the authorities announcing they would impose stricter data security standards on domestic companies that want to join foreign stock exchanges. European stocks rose on Wednesday, lifted in part by upgraded growth forecasts from the European Union. The European Commission raised the Eurozone growth and inflation estimates for the year. However, the organization was also warning about the risks posed by the new variants of the coronavirus. The EU Commission raised its forecast for Eurozone GDP growth to 4.8% in 2021 from 4.3% to 4.5% in 2022 from 4.4% seen in May. It also expects the Eurozone inflation at 1.9% in 2021 and at 1.4% in 2022. The forecast for Germany's GDP growth was revised to 3.6% in 2021 from 3.4% to 4.6% in 2022 from 4.1% seen in May. For the session, the Stoxx Europe 600 index rose 0.78%, the German DAX gained 1.17%, and the French CAC 40 was up 3.31%, and the FTSE 100 rose 0.71%. In individual stocks, Shell jumped 3% in a knee-jerk reaction to the report that the Anglo-Dutch firm will boost shareholder returns via share buybacks or dividends following a strong second quarter. The company said it would increase total shareholder distributions to within the range of 20% to 30% of cash flow from operations beginning in the second quarter. In the first quarter, the company raised its dividend after profits rose to $3.23 billion, while its net debt dropped below $65 billion. The firm said it would stick to its spending plans that would remain below $22 billion in 2021. Following the announcement, the company's shares rallied over 3% before erasing gains to finish 0.63% lower. Overnight, Wall Street closed at a new high after minutes of the Federal Reserve's latest meeting gave an upbeat outlook for the U.S. economy. Some members saw inflation as rising quicker than projected, but that did not shock markets. Others stressed that the economy has not made enough progress and that more evidence is needed before acting. As a result, the benchmark S&P 500 index rose 0.34% to 4,358.13. The Dow Jones Industrial Average added 0.30%, and the Nasdaq Composite gained less than 0.1%. The dollar dipped in the immediate reaction to the FOMC minutes but rebounded, so the greenback has been holding on to most of its gains, only marginally retreating after the Federal Reserve's minutes showed no urgency to taper the bank's bond buying scheme. Meanwhile, Asian stocks fell to a 6-week low on Thursday amid a widening Chinese tech crackdown. A surprising hint at monetary easing in China raised questions about the strength of the global pandemic recovery. Japan's Nikkei 225 lost 0.9% after experts recommended a state of emergency in Tokyo from Monday through August 22nd. South Korea reported a one-day record increase of new coronavirus infections, adding to the negative tone in regional markets. The MSCI's index of Asia shares outside Japan fell 1% to its lowest since late May, led by a 2.3% drop in the Hang Seng, where Tencent and Alibaba plunged to year-to-date lows. S&P 500 futures fell 0.2% and Euro Stoxx 50 futures shed 0.1%. The ECB President Christine Lagarde is set to unveil a more balanced inflation target as the central bank has concluded its strategic review and will publish the results later today. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.